Welcome back to Muffet Investment Views the Go-To channel for economic analysis and stock ideas. Today, we're diving into the oil market outlook for 2024, examining supply and demand dynamics and the impact of recent geopolitical developments. Let's get started. According to the International Energy Agency, IEA, and OPEC, global oil demand is expected to rise by 1.1 million barrels per day in 2024. However, this is a slight downgrade from previous projections due to slower economic growth and weaker industrial activity, particularly in Europe and the United States. On the supply side, non-OPEC Plus production is forecast to increase by 1.6 million barrels per day, driven by robust outputs from the United States, Brazil, Guyana, and Canada. In contrast, OPEC Plus supply could decline by 820,000 barrels per day if current production cuts remain in place. Global oil inventories surged by 34.6 MB in March as oil on water swelled to a fresh post-pandemic high. On land, stocks fell by 5.1 MB to their lowest level since at least 2016, as total OECD stocks declined by 8.8 MB to a 20-year low, while non-OECD inventories built for the first time since November. Poor industrial activity and another mild winter have sapped gasoil consumption this year, particularly in Europe, where a declining share of diesel cars in the fleet were already undercutting consumption. Following a 210 kb/d annual contraction in 2023, European gasoil demand declined by another 140 kb/d YoY in 1Q24. This reflects significant deindustrialization in Europe. Geopolitical factors are playing a significant role in shaping the oil market. The ongoing conflict between Russia and Ukraine continues to disrupt supply chains and create market volatility. Additionally, NATO's recent decision to permit Ukraine to target military sites inside Russia has escalated tensions, which could further impact global oil supply and prices. Ukraine targeting Russian oil refineries and infrastructure can potentially reduce OPEC supply and cause rising prices. These developments, combined with heightened tensions in the Middle East, especially between Israel and Iran, are pushing oil prices higher. Brent crude futures recently peaked at $90 per barrel amid these geopolitical uncertainties. Despite these challenges, the overall market is expected to be more balanced in 2024. Global oil inventories have surged, providing a buffer against supply disruptions. However, maintaining this balance will be crucial to avoid renewed market volatility. Looking ahead, global oil supply is projected to rise by 1.6 million barrels per day in 2025, with non-OECD countries driving demand growth. However, OECD countries are expected to see a decline in oil consumption, reflecting a broader shift towards renewable energy sources and more efficient technologies. So, in our view, there is potential for oil prices to fall due to reduced demand and surging non-OPEC production. The prices are maintained at slightly higher level than demand would imply due to risk premium from geopolitical tensions. If we do not see further escalation in geopolitical tensions and the output remains the same, the oil has potential to fall to around $62. If it does fall, it would be an excellent time to buy oil stocks as the medium-term outlook remains good. In conclusion, the oil market in 2024 will be shaped by a complex interplay of supply and demand dynamics, economic conditions, and geopolitical tensions. Investors should keep a close eye on these factors as they consider their strategies. Thanks for tuning in. Don't forget to like, subscribe, and hit the bell icon for more in-depth market analyses. See you next time.